Hello, traders. Welcome to today's Pairs of the Day update. Let's dive into the latest movements and key factors influencing the gold, US dollar, and Canadian dollar. From the US, Federal Reserve Chairman Jerome Powell's recent comments on the disinflationary trend resuming have put pressure on the US dollar. Despite his cautious tone, his remarks led to a softer greenback ahead of crucial employment data. The upcoming non-farm payrolls report is expected to show the U.S. economy added 190,000 new positions in June, down from May's 272,000. This slowdown in job growth is a key factor to watch. Weaker economic data, including softer inflation and services PMI, have increased market expectations for a September rate cut by the Fed, putting further downward pressure on the U.S. dollar. Meanwhile, gold is consolidating just below the $2,360 mark, reflecting its stability amidst a quiet U.S. holiday. The metal has shown resilience, maintaining its weekly gains. The U.S. holiday has contributed to the calm in the gold market, with limited activity keeping the price steady. Traders are now looking ahead to key economic data releases. Investors are keenly awaiting U.S. employment data, which could significantly influence gold's direction. Strong or weak job numbers will provide cues for gold traders. In Canada, USD CAD is trading near 1.3600, underselling pressure for the fourth consecutive day. The pair's decline is supported by a weaker US dollar, which is struggling amid economic uncertainties. Recent weaker US economic data and growing expectations for a Fed rate cut in September have benefited the Canadian dollar, as traders move away from the greenback. Attention is also on Canadian employment data, with expectations of a decline to 22,500 new jobs and an increase in the unemployment rate to 6.3%. These figures will be crucial for the loonie's next moves. Now, let's see what the technical analysis reveals. Let's take a look at the chart. We have opened the 4-hour chart of USD CAD. The price is currently trading below the 20-period moving average, indicating bearish momentum. The stochastic indicator is moving inside the oversold area, suggesting potential for further decline. For support and resistance, we've identified 1.3588 and 1.3554 as support levels, and 1.3640 and 1.3677 as resistance levels. If the price continues to move lower, it could find support near 1.3588 or potentially lower towards 1.3554. On the upside, any corrective upward movement might encounter resistance around 1.3640, with potential to test higher towards 1.3677 if the bearish momentum weakens. Now, let's switch to the 4-hour chart of gold or XAU-USD. The price is currently trading above the 20-period moving average, indicating bullish sentiment. The stochastic indicator is consolidating in the middle from the overbought area, suggesting that the gold price is awaiting the non-farm payroll data to gain more direction. For support and resistance, we've identified 2,342.34 and 2,324.25 as support levels, and 2,368.65 and 2,387.58 as resistance levels. If the price remains steady, a breakout movement might be the potential trade strategy. Support around 2,342.34 or lower towards 2,324.25 could hold if the price corrects downward. Conversely, an upward movement towards resistance levels at 2,368.65 or higher towards 2,387.58 could signal a bullish continuation, especially if the upcoming data supports a positive outlook for gold. Remember to always be aware of your risk management before you enter any positions. Okay, that's all for today. See you in the next video.